on your radar this morning. Let me also bring on board Amnish Aggarwal, Head of Research at PL Capital, to talk to us about how he's viewing markets and what's the course for markets going forward. Amnish, it's a weak day today, at least in terms of the global cues that are coming in. There's, of course, the tariff uncertainty, which is also playing out. Currently, 10% tariff is what India enjoys, along with several other trading partners of the US. Talk to us about how large this uncertainty is, or do you believe that the unwind on this uncertainty will be fairly quick? Give us a sense of that first off.
This is a situation of your trade parameters in the US remains very volatile. Now we have got some interim arrangement which is already there with US, but as we have seen over the last 1 year that nothing can be said with certainty, because this is not only the India problem, this is a bit of a geopolitical problem as far as US tariffs are concerned. Now, I would say that at this point of time, I would be very cautious on how the deal with US will pan out, how the tariffs will be. Something like you can say, if we don't gain, but if we don't lose from the situation we are in, that should be a satisfactory situation for the country. And I would be focusing and I would be more gung on some of the other deals which we have done, which includes your EU, because EU put together is as large as US, and where we are, I think, getting much more better terms of trade. So in the near term, I think based on particularly the tariff policies of US as well as other geopolitical factors, I believe that overall volatility in the markets will continue.
For IT, before we see some semblance of sanity perhaps emerge, how long do you think the market is going to give IT?
I say it's very uncertain because it's not the beginning of AI or the transformation. It's not the end of it, but it is the beginning of it. Because it has just started, you can say, getting noticed and getting some impact. So we are not in a stage when we see that the growth rates of the companies have started plummeting, or you can say some margin pressure is there. So this is, I would say, a big reset. So I don't think it is going to get settled in a quarter or two. And one needs to wait and watch how deep and how big the impact would be. And I do believe that it has got far deep ramifications for India, because in the end, if the industry transforms, if, for example, people say that AI is going to create these many million jobs, that might happen in the longer term. But in the interim, how the business model of the listed IT players will get adjusted, how will their profitability be, how will their growth and margin be, something which is very uncertain, and market actually hates uncertainty. So I don't see any big green shoots to come for for IT, at least in the near term. And that's the reason we have been underweight on IT services from I think, at least a couple of years. I can recall we have never been that gung-ho because the valuations are cheap, but the uncertainty is very high.
Yeah, that's the case. And Kunal, what about the charts? Do they seem anywhere close to bottoming out?
Doesn't look like, Aisha, at least as of now, because it's not the pace of correction for the IT stocks, but I think it's that drag for the IT stocks after that first initial bout of a 20% odd correction for large cap, mid cap IT names. That correction inertia is still persisting for the IT names, and it started off with the large cap IT stocks initially, TCS, Infosys, etc., taking the first knock for themselves, and now it's trickling to so many of the other mid-cap names. In fact, I think a day like yesterday, you saw names like Coforge, Persistent, etc. The mid-cap IT stocks, they were at the brunt of some decent selling. I think 3% or 4% down for these stocks on an intraday basis. So that tells you itself that the move is not ending very quickly for these IT names. You're not seeing any major kind of a volume built up on the positive side. Neither the indicators on the daily or weekly charts for the IT stocks into an oversold territory. So I think on the back of this, it just looks like that I think it's better to wait, let this pain settle out. Maybe it will take another few days, maybe another few weeks. difficult to anticipate how much time it will take. But it's better to try and wait out and just come to that point where there is a zone where the selling in the IT stocks abates, and that's where I would probably believe that maybe better risk reward originates for the sector.
Okay. Now let's talk about the telecom major, Bharti Airtel. I'll just quickly try and sum up everything that's playing out with regard to an Airtel. 11.4 lakh crore is the market cap of Airtel currently. It's trading at sub 2,000 rupees a share. What we're also seeing is that foray into NBFCs. It's a large foray, of course, and it could be a multiple value unlock at some point of time in the future, because that NBFC will likely list at some point. Now, you've got 60,000 crore of free cash flow, which Airtel largely generates every year, annually now. So the stock itself is trading at roughly 20 times odd in terms of the free cash flow that it generates. And now it's going to put some of that, not maybe 10 to 15% of that into the NBFC arm. That's really the mandate which is likely to play out. Amnish, how are you looking at this development? That's point number one. How do you look at this from a value unlock standpoint, maybe over the next few years? And what are the risks, in your opinion, with regard to the lending? Since they've already done it for 2 years, they have a good sense of how this is done. So give us a sense of that with regard to fundamentals.
I think one needs to look at it from three angles. One being that it aims at utilizing the cash flows which the company is throwing. And because you are into telecom, we have got you can say, digital platform and tech stack already there. So they are just extending it to make it bigger than what scale they are operating it today. Now, in case of say lending, whether you are using a tech stack or you can say other physical infrastructure, which obviously you will need to some extent to scale it up. The bigger issue is always that how is your screening process and how you are able to control you can say how the lending is done, the collection system, and your delinquencies or NPAs. So I think if they are able to control that, and given the kind of money which they are allocating and the kind of reach which they have got through their mobile network and all, I think they have got a fair bit of chance that they should be able to scale that up over a period of time. Now, as far as value unlocking is concerned, I think it is too premature to, you can say, presume that, and one will only understand over a period of time. But definitely for a company which is throwing in so much of cash, I think it is going to be a good extension and good usage of the cash which they are throwing. And I believe that this is not going to be the first one. I think some of the other segments which are related to what they are doing, like your data centers and all, I think Airtel will also play a major role over there over a period of time. So I think it's quite an interesting move by the company, but the impact on the financial and value unlocking, I think it is going to take a pretty long period of time.
Does anything materially change for you where an IDFC First Bank is concerned? The 16% kind of knock on the stock warranted. Would a larger cut likely come, in your opinion? And how comfortable are you with the kind of management guidance that has come through post?
You see, we don't have a formal rating on the stock, but having said that, I think the amount of hit of 590 crores is not that big with regards to the size of the balance sheet of the company. So that is one. However, it raises some questions on the process and systems which are you can say currently prevalent in the organization, which obviously they will have to take stock of. So usually on you can say such an announcement, there is an initial panic or the reaction, which has obviously come yesterday. But over a period of time, I think if they are able to manage the situation well, if their entire, you can say, the deposit franchise is intact and they take the corrective measures, I think then over a period of time, things should actually recover for IDFC Bank.
Right, okay, that's the take coming in on how much more pain for both an IDFC that we saw in trade yesterday, along with, of course, AU Small Finance Bank. Just looking at the newsmakers this morning, though, you've got, of course, a Bharti Airtel, which we just discussed. There's Vari Energies as well, which has secured a domestic order to supply 500 megawatt of solar modules. There's Lupin, which has got the European Commission approval now for a biosimilar. So that's the other stock which is also going to be in focus this morning. And then, of course, this Chalet Hotels, they've approved the development of a 330-room hotels in Hyderabad. The project is worth about almost 630 of 3-odd crore rupees. So that's the other stock which is in focus. And then, of course, this Cyient as well, which is incorporated a new entity in USA, which is going to, of course, support and expand their operations in aerospace as well as the defense industry. So some of these newsmakers are what we're keeping on our radar. But just looking at the market setup yesterday you did have some of the smaller banks perk up quite well. Look at the move on an Indian bank, for instance. Almost a 3.7% of a perk up is what you had on the stock. And some of the private banking names did very well. Kotak Bank held out by 2%. You have the likes of an SBI, of course, which we discussed. Axis has been doing very well off late, and you did have a catch-up even from an HDFC bank. But Kunal, within the smaller banking names, Indian Bank, BOI, BOB, etc., included in that, any trading opportunity?
Yeah, I think there are two of them which are very, very attractive on the charts. And one of them, of course, which you enumerated, it's Indian Bank. I think the stock has been a spectacular stock over the last, I think, 3, 4, 5 years. I remember, I think, a point where Indian Bank was beaten down to almost 300, 350, 400 kind of a zone. And from those levels, the stock has gone through a classical rally. It's been a fantastic trending stock over the last 4 to 5 years. Even on the short-term charts, when you look at this last, I think, 3 months, 4 months of price performance from the November or December lows for Indian Bank, when the stock was almost at 800 levels, the stock from there has also climbed up another 20%. Even at current levels, the stock is confirming swing breakouts. The volumes have been very consistently positive for Indian Bank on the daily charts. There's another PSU banking name which is extremely attractive, something which he flagged off, I think, as a trading idea a couple of weeks back, and that's Union Bank. The stock in the last, I think, again, a couple of weeks has shown a very good breakout. It was a bullish flag pattern breakout for Union Bank. The stock breaking initially levels of 180, 182, which was the previous barrier. I think yesterday the stock came very closer to testing the 200 mark. 199 approximately was the high for the stock price on yesterday's closing session. But I would believe that many of these stocks are still looking quite strong. It still indicates that we are looking at a major trend revival for many of the PSU banking names. And I think for someone who's looking to bet from a medium to longer term perspective and trying to ride the trend, these two could be good bets other than SBI.
Also joining us, Chandan Taparia. Chandan, how do you look at the expiry today? Do you see the Nifty in a narrow range because of the expiry?
Yeah, good morning. Thanks for having me. So if I look at the expiry point of view, the index is up by around 2%. And volume weighted average for the entire series is near 25,618. But if I look at the weekly point of view, the market got stuck in a range and we are almost quoting near its weekly volume weighted average. So I believe it would be the range bound bias. However, market may turn volatile in a broader range. So I need to closely watch the 25,500 as a major support because we are witnessing sustained put writing in that strike. So 25,500 to 25,800 is going to be the broader trading range. However, we need to keep in mind that some short covering could be there in the bank Nifty, which is holding well. But 25,500 to 25,800 is the trading range we need to follow in the Nifty index for the day point of view for expiry settlement.
And what about some of the private sector banks, ICICI and HDFC Bank?
Yeah, so like India VIX is near 14 levels and we have seen surge in the VIX from the lower levels in last couple of weeks. And because of that, some swing could be there. But when I talk about the bank Nifty and selective private and PSU bank, I believe bank Nifty should hold the support of 60,500. We are more positive on the PSU bank compared to the private bank and expecting short covering trigger in counter like SBI, Union Bank, Indian Bank. In private bank, I'll focus more on counter like Axis Bank, which witnessed some buying interest holding above its volume weighted average. But one need to keep in mind that view is positive to range bound, not the aggressive bullish. So buy on decline could be there in the Axis Bank with the view that put writing is visible. 1350 is major support for an upside target towards 1400, where we are witnessing sustained call writing for the current series.
Amnish, wanted to get your thoughts on autos, because soon we would be staring at the monthly sales data for Motown. Do you sense that the traction that we saw last time in passenger vehicles and CVs, the farm segments as well of most companies, is that going to continue, you think, the momentum?
You see, the auto sector actually changed gears immediately post the GST implementations. If you look at the numbers which came from, say, October onwards, so last 3-4 months, they have been fairly robust. The two-wheelers actually were not doing all that bad earlier, but for PVs, I think the major push, except M&M, which was already doing well, it came afterwards. I think logically speaking, I think the momentum should continue, but if you look at the last month numbers, I think we actually saw Maruti giving you flattish kind of volumes for your small cars. And the growth, whether it was Maruti, M&M actually is doing very well in the SUV segment. So I think again, if the small car growth rate actually shows some signs of a fatigue after 3 months of run, so that is not a very good news as far as your small car or the entry level segment is concerned. But some of the other segments in auto, for example, two-wheelers across the board, they continue to do well. The marriage season has been good, and I think the momentum there seems to be intact. Now, if you look at the other segments, for example, commercial vehicles, outlook seems to be good, and given the fact that the overall demand outlook in the economy looks good, the companies are indicating that it might be the beginning of another you can say positive cycle for that. And finally, on the farm sector, the past few months have been really good, but I would say watch out for how the next monsoon pans out, because the initial reports by many of these, you can say the non-met agencies, they are indicating El Nino, and during usually the El Nino year, there's an impact on the monsoon which could actually translate into some sort of a drag for the tractors in particular. So I think we have seen very robust 3 months. So and the same might continue for a few months more. But given the fact that many of these stocks have run up now, and they are not where they used to be 3 to 6 months back, one needs to be selective in the auto space and not just pick up any stock at this point of time.
Be selective. Would that also be your advice within metals, Amnish, or given that we're at life highs where metals is concerned, or in around the life high kind of mark, you would currently stay wary of metals? Where do you sit with regard to where metals is concerned?
You see, as far as metals is concerned, I think particularly if you look at the ferrous space, I think there's a lot of momentum there. The demand is pretty good, and the profitability there is likely to improve in the fourth quarter. So in the ferrous space, I think even from the current levels, we see a possibility of making, I would say, reasonably good returns incrementally from here on. As far as the non-ferrous is concerned, aluminium and all that, I think we have already seen the best over there. And something like, you can say, the other companies like your Hindustan Copper and all, I think they have been, Hindustan Zinc, sorry. So they have been, you can say, moving up more on the price action on the silver side. So at this point of time, your ferrous is the space, I think, where we are still positive on.
Right. Okay, Amnish, great to have you today on ET Now. Thank you for your time as always. Chandan, if I could get you in, where is it that you're seeing